Hi, everyone, and welcome to Inspiratia's latest webinar. This is ahead of our upcoming energy storage event taking place on the 18th of October in London. And I'm delighted to have with me the KYOS team, who's going to kind of go through some questions regarding the forecasting of battery revenue, which is quite important to the industry. Some of the things they're going to be talking about is what about co-located assets, for example, and whether or not the valuation approach presented also works for storage assets, looking at the advantages of valuation methods compared to some other methods that are also available in the industry, and also kind of some of the future trends we see for energy storage. So over to you guys.
Yeah, Elsa, thanks very much for the introduction, and yeah, thanks to Inspiration as well for giving us the opportunity to explain our approach to forecasting battery revenues. It's yeah, clearly a hugely important and also challenging and fun topic, given what's going on in the industry right now. And yeah, in that sense, we're also looking forward to the event on the 18th of October with hopefully a very interesting panel discussion about battery revenues and trading batteries, etc., etc. Now, before we dive into the actual battery revenues, let's first explain a little bit about KYOS, introduce ourselves. We're an energy analytics company, which means that every topic, every challenge, every problem in the energy industry which might require mathematical solutions, simulation, statistical methods, we'd like to get our teeth into those and come up with solutions. Our solutions come in various shapes and forms, as you can see here on this slide. It can be in a software solution, as a software as a service format, for example, valuation of power plants, of renewable generation, valuation of gas storage, gas swing contracts, batteries, of course. So software is basically our models in the form of software. That's our bread and butter here. We more and more also provide software as CTRM or ETRM solutions products. So companies with a multi-commodity exposure, wanting to measure their risk, come up with proper hedging strategies, they use our software more and more. Consultancy is something we do for corporates, for governments, for semi-governments, TSOs, DSOs. It's an important task of KYOS. And last but not least, we provide price data. So if a company needs live curves of any commodity or energy commodity, other commodity, or end-of-day curves for market-to-market purposes, we can provide that. I should also mention that we have a long-term fundamental model, which is important if you're working on a business case for, let's say, a battery, or you want to value a PPA, you need perhaps 25 years of a price forecast, and that's something that we offer as well. We are lean and mean, I would say. We are still a very small company, less than 40 people. But if you look at our customer base, then all the well-known large traditional energy companies are in our customer base. We serve more and more trading companies as well, and increasingly we see companies outside of the energy, the dairy business, agricultural business, making use of our products. And of course, we're talking about batteries and renewable energies today. So more and more developers of such projects, also banks who are looking to project finance, let's say a solar park, a wind park, we increasingly serve those customers. Yeah, we started out as a company with a solution to value gas storage. The world has changed the last 15 years a lot, and if we of course move with the requirements and the demands of our customers, we very much like to listen to them, where the next developments will be in the market, and try to come up with solutions. So much of our focus today is actually on renewable energy assets, valuation of batteries, also valuation of PPAs. And we are more and more looking at optimization issues in the area of green hydrogen, electrolyzers. So it's a hugely exciting world for us as well. I would say, though, the methodology that we use and have used over the last few years regarding valuation of assets. There's one central theme in there, whether it's gas or a renewable asset. We believe that you should value an asset not by looking at one long-term curve or maybe one long-term curve with a high and a low scenario. We strongly believe that you should capture all the uncertainty that's there in the market by doing proper simulations, and in each simulation path, in each scenario, use mathematical models to come up with the optimal trading strategy and use all that information to come up with a proper value for your asset. But enough about KYOS. Let's talk about energy storages. That's why we're here. That's why the viewers are here. Yeah, if you come from a normal commodity market like I have, you're amazed to see that the energy markets, the electricity markets in particular, have been able to balance all these years with so little, relatively speaking, storage in place. Any other market, storage is what clears the market. And now what we see in electricity, strong increase of renewable generation, the phase out of the good old fossil fuels, or maybe not so good, but the old fossil fuels, brings up one necessity, and that is that we need more storage. And that has led to what I can safely say a bonanza of energy storage projects. If you look at the data, the European Association of Storage of Energy forecasts a 5 to 8 gigawatts per annum growth in energy storage, with 57 gigawatts installed by 2030. And if we only look at our small country here, the Netherlands, our TSO expects around 10 gigawatts installed by 2030. And if you look at the projects that are in the pipeline, and we all know that not all of these projects will come to a reality, but you can truly speak of a bonanza. But it is happening. It's based on fundamentals, and it will take place. So it's hugely interesting. And if you are part of this development, if you are a bank doing project finance, if you are a developer of a standalone battery, or whether you have a solar park or wind park, and you're considering adding a battery to maybe limit your curtailment or have access to other revenues using your battery, you need a proper valuation. And the cost side of installing a battery is one thing, but the real challenge is really forecasting the revenue stream of a battery. And it's a fantastically interesting and challenging topic. Of course, you're dealing with changing markets, with changing regulation, with the fact that regulation is different in adjacent markets. You know, what works in Belgium might not work in the Netherlands in terms of viability of a battery. But the biggest challenge, we would say, in terms of the valuation of a battery is really the fact that you have so many different revenue streams. In a way, it's a blessing, because as a battery operator, you're not dependent on one income stream, but you have all these different options. You can access income from the balancing market, helping your TSO. You can access revenues from the wholesale markets or from grid services. And typically, the business case of a battery is a combination of all these types of income, something we call value stacking. So it's a blessing, but if you want to have a proper valuation of a battery, a forecast of these income streams, it's a challenge, because all these things, they affect each other. If you put your battery up for a frequency containment reserve, which might give you a stable income, that's very nice. Obviously, that capacity cannot be used anymore in the wholesale markets, where maybe your income might not be that stable, but there's maybe more opportunity. The spreads are increasing and increasing. So if you're on the right side of the trade, you might have some nice income there. But the fact that you put your battery up for FCR or FRR means that your potential activities in wholesale markets are affected. And the fact that it's all related to each other makes it an interesting and also mathematically complex topic. Ewout will now dive into the individual income streams a little bit deeper. and tell you a little bit more about how we actually approach the valuation of these separate streams. Ewout.
Yeah, thanks, Steven, for that thorough introduction. Yeah, so we will start with looking at a few of the main markets that battery assets can tap into to generate revenues. So the first market, which is in many countries, for many battery assets also currently the main revenue driver, is the FCR market. So the frequency containment reserve market is also by its nature very suitable for batteries. It requires very short activation times, which a battery, of course, can do with very little or really no energy. So that's a very good fit with the characteristics of a battery. Yeah, so basically most let's say battery markets started to develop with basically with being active in the FCR markets. But there are a few disadvantages of the FCR market, and also reasons why you should maybe not fully rely on when you make your long-term business case on FCR as one of the main drivers of revenues. And one of the things is mentioned also on the bottom here of this slide is just the pure size of that market. FCR, so the need for FCR, so the need for the TSO to have this really short-term balancing mechanism is very limited. If you just look at the Netherlands, for example, and so the current need of the Dutch TSO tenants for FCR is only 76 megawatts. And meaning that with a few battery projects, that market is already depleted. And with the massive pipeline of projects that's under development, there's no comparison basically to the FCR market. So basically, more and more companies, more and more project developers are looking into other markets, and then the wholesale market is typically seen as like a good alternative. But also there are different segments that you can be active in. And so traditionally, people were looking more at, let's say, the day-ahead market, a well-known market, very liquid as well, so easy to become active in. But intraday market is getting more and more attention as well. Also, again, fitting really nicely with characteristics of a battery, so short lead times. Relatively short periods, so all fitting very well with traditional lithium-ion batteries, and also there are a couple of things which makes those markets more and more interesting. And so basically spreads are increasing basically within the day, but also between day ahead and intraday markets, as shown in this graph. And so the spread between those markets is increasing over time, and mainly as a result of increase of renewable capacity, and leading to more forecasting errors, and therefore more need to adjust volumes also in the intraday markets. And just to put some numbers as well of the fact that those markets are rapidly growing. If you look at the APEX ID1 market, as one typical index, which is basically the most liquid index of the intraday market, and that showed over the year basically over 40% growth year on year. And so that's quite an aggressive growth. So showing that also the liquidity gets deeper and making it even more attractive for batteries to be active there. Another market which is becoming interesting and more interesting, and especially in some markets, is the imbalance trading or passive imbalance trading. It's not allowed in all markets, and most common markets where this strategy is allowed are the GB market and basically Benelux and Austria. And what that basically means is that you as a market player, so as an asset and battery asset owner, you deliberately go short or long your portfolio, so deliberately creating an imbalance position. And you do that basically on your expectation on how the actual imbalance price will be. And so meaning that if you forecast that the imbalance price will high, It basically means that the system is most likely will be short. So it can be your decision then to discharge your battery and therefore taking a long position. And if you were right with your forecast, basically the TSO will basically use your long position to balance the system, and you will be rewarded with your with the imbalance price. We've seen now also with our analysis that it's getting more and more attractive to be active in that market. So there are very large, very sharp price peaks in imbalance prices, making it interesting to be active there. But it is not an easy market to be active in. It requires, first of all, really good forecasting skills to forecast the imbalance price. And also you need to be really able to operate on very short notices. So it's quite a big investment on the operational side. So when we look down more about energy storage valuations, we see basically a couple of different possibilities, so different approaches to valuations. And so we see a lot of approaches using kind of backtest methods, and so looking at actual historical data, and then basically optimize your asset or your project based on that data, which is on the one hand really good because it uses actual data as it was, and so you can really see, okay, what could you have made with your asset in a certain period. But it's of course very hard then with that historical data to assess the future. And as we have seen, things are changing quickly with more penetration of renewables. And how does it impact prices, price spreads? That's very hard, of course, to just base that on historical data. And then it only gives you also one reality. So it's one set of prices, one scenario, basically. So it's really hard to do stress testing, for example. And then on the other hand, you have more like forward-looking strategies. Can be different versions of forward-looking strategies, but all of them, they take like a certain forward curve into account, typically based on a fundamental model, so that you can take fundamental structural changes of the energy market into account and see, okay, how does it change spreads? How does it change your intraday shape? And then, using forward strategies, there are different variations. We, as Steven mentioned in the beginning as well, we really focus on taking simulations as the basis for the valuation. And so we take the forward curve, and then we generate a large number of potential price scenarios, basically. So using Monte Carlo simulations to basically test different scenarios, different market scenarios, taking more variety in the market into account. Disadvantage, of course, that makes it modeling a lot more complex, as getting accurate and realistic simulations for the different market segments that we discussed. So day ahead, intraday, imbalance is not an easy task, but we think it is essential to really grasp all risk, but also potential of your battery project going forward. So what we have developed, so we have our own energy storage valuation model, key battery, as we call it. And the basis is, as you can imagine, price simulations. And so the model generates a large number of price simulations around the forward curve, and for the different market segments that are available. And then we're using realistic trading strategies, as if you would be an optimizer, basically, for each of those price paths, for each of those price simulations. And then by that optimization, we can then assess market value of your battery. And then the key is, of course, that you try to avoid perfect foresight, because in reality, you also not have that exactly. You also not exactly know what prices will be. So we have certain optimization methodologies that allows you to avoid perfect foresight and never getting to even more realistic forecast of your revenue. And the nice thing about the strategy, about this methodology, is that it does not only give you your expected revenue projection, but also the probability around it. And so what is your P10, your P19, revenue expectations going forward. And so very useful as well. And when you're talking to your to investors, to get a feel about, okay, what is basically your worst case scenarios, and that can help your investors as well to size the debt. Yeah, the key is, of course, as well with any model, is to also include all your physical, technical constraints in the battery, which is also an evolving market. And batteries are, the whole industry is evolving, so also the constraints, the limitations are evolving. So it's also important to have like quite a flexible model that can capture a wide range of constraints. Yeah, maybe high level is how we see that whole basically workflow of coming to long-term revenue projection. Basically, the steps are on the top. As we start with an accurate long-term fundamental hourly price forward curve coming from a fundamental power model. We have our own fundamental power model, but you can also use third-party suppliers there. Then we can generate simulations around it. Both the day-ahead prices are simulated, but also the intraday and imbalance prices is also a very important step in this whole simulation approach. And then we do the optimization using realistic trading strategies. And of course, there's a whole very wide range, of course, of inputs that goes into the model. Has also fundamental inputs. And so how is renewable generation mix going to change? How is the fossil fuel mix going to change over the years? Interconnection capacities, and it all goes into the modeling approach. So it's, yeah, if we explain it, it sounds like a small model, but it's of course a very complex model. But it gives you in the end a realistic projection of what you really can make with your battery assets going forward. To show a bit what kind of results come out of that, we show here an example. It's actually coming from one of our reports that we publish on a regular basis, on a quarterly basis. The link is on this slide as well. And what we show here is basically it's a short-term assessment. So it's the assessment for 2024, so next year, of a sample battery project. And so an example battery project in the Netherlands. So it's a 2-hour battery. And we show them basically, okay, what is the value, the expected value in 2024 by optimizing the asset in the different markets. As well on the left of this table, it shows you under the header average. Okay, what is the expected value that you can make by this with this battery by optimizing it purely in the day-ahead market? Numbers are in Europe per kilowatt hour of volume of your storage capacity. As of 52 euro per kilowatt hours. And then basically by going to the right, you show, okay, what is the effect of tapping into different markets and more valuable markets? And so in the second step, we're adding FCR to the day-ahead market, already increasing your expected revenues. Then we're adding intraday as well to the equation, and it shows as well the big value that you can, for the big additional value that you can make with intraday. And so you're more than doubling your value as compared to the day ahead, purely being active in the day ahead markets. And then finally on the right hand side, the value of being active both in the intraday and the imbalance market, so the passive imbalance markets. And it clearly shows how much value you could make by being active in that market. So this is just an example, of course, what can be done with this kind of assessments. And we have done various assessments over time for our clients and making bankable valuations to support our clients. We also helped our clients with discussions, for example, with their investors, with funds, with banks, explaining especially our methodology and our approach. It's very important. It's not enough to just provide a revenue assessment, and that would just be a black box, and no bank or no investor would, of course, buy into that. But it's very important that that also the investors, but also the project owner itself, obviously, is very well aware of what is behind the numbers and how are they constructed. We're happy to support our clients with that. So this brings us on the end of this webinar. So we hope you enjoyed it and thought it would be was interesting. We have some time for questions. So and then before we close this webinar.
Hi both, and thanks so much for that insightful discussion. We've had 3 questions come through actually, or maybe I think it was 4 actually that's come through. So the first one is, what about co-located assets? Does the valuation approach you presented also work for this type of storage assets?
Yeah, very a bit of echo. A very relevant question. Indeed, co-location of co-located batteries is something we see, of course, more and more in the market. And this approach is very well suited actually for co-located batteries. So we can easily add constraints to our valuations, and which in the end co-location is. You're constraining the way that you can optimize your battery. So we have extensive functionality to add renewable production profiles, also with uncertainties, of course. And we can assess, okay, how does that constraint impact the value you can extract from your battery, your residual value. So the method is very well suited for this.
Perfect, that's great to hear. The next question that we've got through is, what are the advantages of your valuation method compared to other methods?
Yeah, that's a good question. Of course, it's always a bit hard to answer, but I think what we think is very important, of a very big difference for our approach to other approaches that we are aware of, at least, is really the simulation-based approach. I think a lot of the approaches we see are based on either historical backtest or on a certain price forward curve, and maybe there's then a high scenario and a high case and a low case scenario. But we think, especially in the given market and the uncertainty there is in the market, and also the expected changes in the markets, we think that's not enough to grasp the full variety, the full exposure that you really have with your asset. And it's essential to create simulations to really get to, okay, what are basically worst case and best case scenarios, and we think scenarios is the only way to do that. So.
Perfect. And you also touched upon some of the initial trends in energy storage. So this question is also kind of maybe summarizing very quickly, is what trends you guys see for the energy storage assets?
Yeah, that's a very good question. I like that one. Because it's market is of course very much in development. I think what we see a lot, of course, is co-location, right? It's very hot at the moment, especially in some markets like in the Netherlands, where there's big shortage in grid connection, and so project developers are very eager to find places to still build battery assets and existing PV, especially PV assets with grid connection is of course a nice way to build storage next to that. And I think the other trend that we see, important trend, is other markets, of course. So new markets, Eastern European market is getting hotter and hotter, also on the battery side. I think the final trends that we see is definitely larger storages. And so we're really not talking about not anymore maybe 10 megawatt storages that were maybe last year big storages, but we're really talking about a couple of 100 megawatts storage. So the size is really increasing, and very exciting to see what it will bring over the next months.
Definitely, it's definitely coming into a more mature asset class, which is exciting to see across the board. But I think that's it for now. We'll leave the rest for the actual event itself. We're going to kind of be moderating the battery asset trading session, which we're all looking forward to. Obviously, if you guys have any questions for us or want to meet the KYOS team on site, do let us know. I'm happy to facilitate any introductions. And thank you guys both, and hope to see you guys very soon.
Yeah, thanks. See you in London.